Hi guys, I'm Arif Siddiqui. I worked in a very large international bank in 27 years in the banking, and I've seen the migration from a very manual to the automated way, and thereafter, after the financial crisis, I have also seen that how the banks has moved towards the more focus on regulation, controls, and discipline. And now, since last few years, there is a migration which is on a Fintech, and that is a huge disruption towards the banking, where the whole current customer expectation has been changed. Now, if you really see that how Uber and Airbnb has changed the way the intelligent services has to be provided, all the customer is now expecting it. Is it the same way the customer is expecting from the banking industry or insurance industry or some of the other industries as well? Now, people are now used to with the mobile. I mean, most of the people in most of the countries are having huge penetration of a mobile, and that has changed the way the people are engaging with each other or engaging with the banking as well. Let's look into the first slide. In the internet, usage has been dropped from a 65% to 59%, and mobile usage has been increased from 30% to 33%. And same as in a branch, you can see the reduction of around 3 to 4% during the 2015 and 2016. In 2011, the branch was 476 million current account interaction was happening with the customer. So this is the survey or data which is basically the customer interaction and the most important product of the bank, which is current account interaction. And in 2011, on the same time, it was 169 million on mobile and 613 million on internet. So look into what has happened in 2016. It's a huge change between 2011 to 2016. The branch interaction has gone down by almost 50%, and moved from 476 to 279. The internet has been decreased slightly, in fact. So the people are moving towards the mobile banking, and mobile penetration is 10x. Like between the 5 years, the mobile penetration has gone to the 10x. And what is the prediction? The prediction today is that this will go to another 3x by 2021. So if you see in term of percentage that current account interaction with the customer between the branches and internet, branches are very, very small. So the prediction is that branch interaction will slowly go down. The internet will further also reduce, and the whole banking structure will change towards the mobile banking. And that is something that sometimes the bankers like me it is difficult for them to digest it, because we have been trained on the basis last 10 years that whenever we are making the product, our focus towards looking into the regulation, we are looking into that what controls supposed to be built in, what processes supposed to be in it, and what audit issues it can be come into. So all focus, either the product focus that what we are offering, or it is a control focus. Now, this has to be changed. The bankers has to start thinking about outside in, not inside out. Outside in means that what customer may can like or what customer like it. So Uber, when it is not been there or Airbnb was not there, it's not that customer was asking for it. There was no demand for such thing. These people came up with a very intelligent service, a new idea, a new offering to the customer. And as it was with the mobile, where the people are using every day on every minute in their hand, by the way, and their interaction today is very heavily, whether they are going anywhere, these people are putting their photos, they are engaging with their friends. So what they did is they used this tool to basically offer something. And that's what will happen in the next 3 to 4 years in the banking. So a lot this focus is that first, banks has to start thinking differently. Instead of going into the product focus, they have to think about customer focus. Instead of thinking about inside out, they have to think about outside in. Instead of they should talk about transaction, they should be talking about engagement. And that change has to happen in the next 3 to 4 years. Now, if suppose that some of the banks will not do that. I mean, quite a number of banks, or in fact most of the banks are having a digital transformation. That is a different subject, that what we are getting out of from that digital transformation is really, it is very effective, it is happening very well. That we will cover at some time as a subject on a digital transformation. But today I want to touch upon one of the study I want to show, where by 2020, if the banks will not do enough, what is the impact to them. So let's see this. This is the study, potential impact of digital banking on return on equity. So return on equity in the two sides. One is your revenue has to go up, and second is the cost has to go down. And both are very, very important. Like you have to increase your revenue, and you have to reduce your cost. So as this competition is growing, as the disruption is growing, as the new players are coming into the market, as this challenger bank and new banks are coming and attracting some of the customers as well, there are people who are offering the P2P, there are people who are offering the payment. All this disruption is there, and banks has to understand that how in a moving forward basis with this competition they can be able to increase their revenue. The second thing is that how they have to reduce their cost. And why it is important, because all these disruptors, their cost of doing things is pretty low. They are coming up with a very thin infrastructure. These are the mobile only banks. These are the companies which are using only the mobile. And as I showed you that 90% of the engagement in the retail banking side will be mobile in the next 3 to 4 years' time. So the focus of these banks is all about how they can come up mobile only offering to the customer, and how intelligently and how easy for customer to use it, and how transparent it is as well. So the one of the area where the people are very keen to see how much is my fee when I'm doing taking some service, and the new generation is very keen about to know that if I'm taking a service, what is I'm paying for. And banks are used to basically charge. I don't want to say that it was not a transparent, but it was not very upfront telling customers that what has been charged. And that's what is the customer is looking forward, that what they are paying for the services, and how banks has to provide this information. So I call it 3 areas. One is how to improve the revenue. Second is how you have to reduce your cost. by using the new technology. So we will talk about later on at some stage that what is the robo process automation, how the moving forward slowly and gradually there will be huge disruption on a back office and on a call center. And you have seen that even we have not talked about call center or call significant drop in the call centers as well. And that's what will be in the next 4 to 5 years, that calls will move to more on a bots basis, and the bots will be giving the answer, and cognitive computing and artificial intelligence will be used to replace some of the portion of the call center. So this is the story, that if banks will not do much in the space of be relevant and giving the right intelligent services to the customer, they will get approximately 20 to 30% of the impact on a return on equity. And how they can be able to come up with the new things, connect come to the APIs, connect the APIs with the legacy systems. And so what it is basically, that it is not that they are not aware of what can be done. The issue with the large banks is how fast they can be able to implement those things. Because they have, say, 30 geographies or 70 geographies, and in these geographies, first they have to identify the geographies where they want to go first, and when they are going it, how fast they can be able to go and make these changes. So the implementation, speed of implementation to these banks is very challenging as well. Learning to these disruption and partnering with the other fintech is 82%. Very encouraging. In fact, if you see, I don't want to take any bank name, but the few banks has actually acquired the fintech companies. There are few banks who are doing an incubation, and they are working with the fintech companies. So to me, how banks can be able to do faster is that they should really see that where these fintechs are, and they have to increase either the collaboration or they have to take those companies and build into it. So now fintech is all about financial technology, and somebody said, and very well said, that at some stage it will be tech finance, not a fintech. And a tech finance is basically that actually the banks will start behaving as a technology company too. Now, might be it will happen in the next 3 to 5 years, where the huge involvement of the mobile offering will increase, and speed to market will be the key, that who will go first. Customer journey. Onboarding. I mean, most of the bank understand that they have to really fix the issue of onboarding, and most of this is the first top trend in the most of the bank is they are talking about the onboarding. A lot of banks are coming up with a solution to resolve the eKYC, whether it is coming as a face recognition or biometrics or mobile app. So these banks are putting this on the top and coming up with the new solution for onboarding. And integration, as I spoke about, and digital payment. Digital payment is another area where I think already a lot of companies are there, and we will cover when we will discuss about the payment. Let me show you what is the top strategic priorities for financial institution. This is the key. Like this story is that in 2017, what was the top strategical priorities in the financial sector? So if you really see this, design and enhance the digital experience to customer, that is a 71% of the people in a survey in the banking financial services, they said that we have to do it. And there is no doubt about it. Like how they have to change and give a better service on a digital space to the customer in a retail banking area. And 71% means that the strategy is right. Like these people, see, today one of the things is very, very important, in fact, and I said many times, there is no such thing called best practice, or there is no such thing that is, what is the right strategy. Because in the past days, 10 years back or 15 years back, there was a very interesting thing was that, somebody has done something in US or in Europe and bringing it to Asia, we call it, this guy has a knowledge of it, and now after 3 years, after 5 years, we have to bring it to the Asia. It's not anymore. It's the internet days. It is the days where every day the things are coming up. The people are fully aware of that what's supposed to be done. So it is not something that financial institution is saying that we have to, our first priority is to give a digital offering to the customer. This is not something that they are strategizing it. It is there. I mean, everybody is doing it. And if they will not do it, I showed you that what can happen. So the second thing is the enhanced data analytics. I mean, this is the huge area where the challenger bank, payment companies, P2P companies, or you can call it Fintech disruptors, they are using the artificial intelligence to predict. Even though they are predicting the credit affordability. So all the credit analysis which banks does in a one way, like normally what banks does is basically there are number of parameters. They can go to the local credit bureau, download the information of the customer when customer is asking for any loan. Then they go into another area and see central kind of credit bureau. And then they see what is his salary to return the money, whether the affordability is there or not, and how long he want this loan, whether it is a mortgage and whether it is a personal loan. Now this has been changed. These companies are not going to the these credit bureaus and the central bureaus. They are using the artificial intelligence on the basis of grabbing the data from the various resources, scripting the data from the various resources, and seeing that what is his history of paying it. So it is not affordability, it is also that if this guy is paying it on a time, if this guy is very reliable to give the loan. And that's how these people do very fast decision. Another thing is that they do this credit bureau for or the analytics for everyone and keep it the total numbers. So if a person is asking for a loan and he is between 500 to 600 and it shows that yes, we can be able to give the loan, personal loan, it can be given in a 1 minute time. So there is no such thing that any credit analytics is happening in between. So the second point where the banks are strategizing is that how we can be able to use the data analytics. So what happens? The banks is looking most of the time these data analytics in the past and even now as well with the artificial intelligence, how I can cross-sell, how I can be able to give our product to the customer, who are the people I can be able to give my product. I mean, my view is that this is not the same thing. My view is that data analytics you have to do for customers differently. Not for only the cross-sell, because we were doing this in a bank for years as a cross-sell, and we call this a data intelligence and business intelligence. And we should not be doing the same thing with a different name. So my view is that we have to come up and start thinking from the clean slate, very open mind, and then we have to see how data analytics is supposed to be. These are the top three I'm not going to everyone. Now I'm moving towards that, what is the disruption? I mean, in the market, a lot of people talk about the disruption. And is really a disruption is there. And is really the banks are impacting. So, first slide which I want to show you is the top three disruptions to the banking sector. So first is 57% people said that the first is the Fintech. So obviously the Fintech companies are really looking forward and coming up with their own solution and disrupting to the banking industry. And you can see a lot of names like there are 80 challenger banks in the world today. And these are the 80 challenger bank is not new. These are not the bank has just started in 2017. Some of the bank like Fedro started in 2009. And these are becoming a mature banks as only digital only banks. And the bank like coming as a N26, which is only 2 years old, they are already gone into the 17 countries and offering the services and the payment. So what they do, first thing is that I as a banker, I very much know that if you want to go to the one new country, how much time and efforts required for the existing banks, whether it's a large bank or the small bank. So if you are going to the new country, it is not that easy and it takes a lot of time and effort of the current traditional banks. But how come that N26 has gone to 17 countries in 2 years' time? It's a German-based bank. They are working in UK, they are working in many European countries, and this year they are going to the US. And they are looking forward to come to the Asia, and there are 2 banks which are looking forward to be in Singapore. And that is the disruption, because these people has the ability to move very fast. The second thing is they have the ability to offer to customer very fast as well. So, like take the example of the N26 again. Within 3 months, they integrated their system with the TransferWise. And they are giving a complete transparency to the customers that when they are transferring the fund from one place to another place, what are the charges? So the charges they are talking about, what they are paying it to the TransferWise. Very clearly the customer can see that. And what as a bank they are charging also. So this charge is very transparent to the customer. So if customer is happy to do that. And second is they are getting a good rate, FX rate. And that's one of the things is the bank was making a lot of money into the, when people are transferring the fund. And usually the banks do on a one-to-one basis. But this TransferWise and some of these are doing on a netting basis. So when they are doing in a netting basis, actually the fund has not been transferred. And they are giving the average rate or maybe the better rate on FX. So these fintech companies are coming up very, very aggressively. It will take a few years to mature. They have to understand that how they have to comply with the regulation as well. They are doing it. They are facing a difficulty as well because they are new in this space. And third is that these people cannot go away with the little bit of what banking products are. Maybe in a passage of time we can do that. So a lot of banks came up without any sense of saving current account and deposit account. They are saying deposit to us. That's it. And they are giving a various option and ways that this can be placement. And that is artificial intelligence being used. So That's what it is, that how the bank in the next 3 years really focus on intelligence services rather than the product offering and putting a new wrapping on old products and again give it to the customers. And we are used to do it. I mean, we are the bankers. A current account is still a current account. We can wrap it into hundreds of different ways and we can be able to offer the same thing to the customer. So my view is that think from outside in, thinks from an intelligent offering, thinks from a perspective that how the customer is looking for and how you can give something different which customer love to take it, like Uber. So coming back to the second one, which is the disruption, is the global regulatory reporting. It's fact, it will not go away. So in the last 10 years, as I said, that a lot has happened in this space. It will continue. It will more and more regulation will come, definitely. You can see a lot of CDD and eKYC has been enhanced. So the customer is doing every transaction or the large transaction. The bank is going and asking them, what is this transaction? Bank is going every year or second year to the customer and asking for documentation, asking for the various transactions they have done in past. So there is a lot of governance, there is a lot of regulation, and every governance and regulation is a cost to the bank. So the bank is putting up a huge cost on regulation, compliance on a regulation. And the new things are coming up. Now there is a sanctions. So there is a naming sanction, there is a country sanction, there is a trade when somebody is importing or exporting, whether the ship belongs to a country which is sanctioned. So there are number of areas where the banks has to really see on a regulatory compliance. And the huge cost bank is paying to comply with this regulation. And that is also the challenge, like the top 3 challenges the banks are happening on a disruption is one of the challenge, that how the banks can be able to use kind of RegTech. RegTech is a regulatory technology, and nowadays there is a lot of regulatory technology which is being used by doing a scripting on the artificial intelligence to generate those reports which the regulator is asking. So the human effort will be getting lesser and lesser, and the accuracy will increase as well. The third one, which is new business model. Wow. I mean, new business model is, I think, is a separate discussion we should be having on it, because this new business model is coming up. I will take a few minutes to explain it, what is the meaning of the new business model. So first thing is that PSD2 has been implemented in Europe. It has already been enforced by the time I am now talking. And what it is basically that they have created an aggregator like AISP and PISP. So AISP is basically these aggregator or the fintech companies can come up with the new services and ask the customer to allow them to get the data from the bank. So if the customer is allowing them with the two-factor authentication in a secure way, that yes, you can be able to go and get my data from the bank, with this regulation, bank cannot refuse it. So that is the huge things coming up. It is only at this stage implemented in Europe. I heard about that Hong Kong came up with a guideline that how we have to do this. Some of the countries are also looking forward that how the regulation has to be worked out in the next 2 to 3 years to allow this. Now, what can happen in an aggregation? Like if a customer has an account in 4 different banks, and around seven different lending and liability product. These companies can grab the data and show them in one screen on mobile. And also with the artificial intelligence, they can work out and say which fixed deposit is not working, in which bank. What they do is they will propose also. They will do marketplace job as well. So what they will do, they have the data of other banks as well. And they said, oh, another bank is offering a better offer to you. I think this is the offer, you should take it. Now, that is also the huge disruption. The second is the PISP. PISP is that the same thing. These fintech companies and aggregator, they can ask bank to debit the account on the basis of the customer two-factor authentication. So if customer allowed to debit the account and fund has to be transferred to someone else, the bank cannot say no. So it's a huge challenge. To me, it's a huge challenge to the banks for three reasons. One is they build the infrastructure with a lot of cost. Should it go with a free service in a way that they should be sharing the data? And the view is that data belongs to the customer, not to the bank. So that is a different debate. I'm not doing it here. In fact, second thing is that the bank has invested a huge money on a compliance. And at the end, who's supposed to be responsible for the compliance is the bank. So if they are offering these services, the bank, what is for the bank? And third is that many years from now, or maybe the 5 years from now, the bank will become a utility company. And that is a worry in my mind. I mean, I'm not saying that it will happen, but seeing the experience and seeing that moving from a very manual to the automated way what we have today on a mobile and internet, I can see that anything can happen nowadays, and the speed is too fast. Those days, the speed to implement these things is a number of years. Today is a number of months. So this is coming up, and I think the bank should be ready for it. Because Europe is leading it, so the lot of technology will be built up over there, and the people will start using it. And when the people will start using it, and the same thing like Uber, it is very less time will require to move it to another countries or to globally, if something will work very well for the customers. Now move it to the next area. What these disruptors, what is the area where they are disrupting to the banks? So the bank should know, and these are all in a retail space mainly. One thing we have to understand is the bank is not doing only the retail piece. A lot of banks, or the large banks, are not only retail bank. They are doing corporate banking, they are doing a private banking, they are doing the trade. So there is a huge piece, and more than 50% in the many banks is coming from the other side, not from the retail. So disruption to the bank is not really the people which they feel it, what will be with the bank? Bank will be remain there. When and disruption coming in a wealth management and other areas, it will take a longer time. Even in a trade, what we are, I'm seeing in a use of the various new technology, it is not something can happen in this year or next year. It will take a longer time. So let's come back to the retail side. In the retail side, what is the disruption today happening because of the Fintech? And this is the slide which shows you that where the 55% of the disruption is. So if you see digital banking is one of the area where the disruption is there, and second one is the payment. Now payment is a huge, and it is growing actually. It is coming more and more in recent years. So you will see huge things in a payment. And let's talk about now is Alibaba and WeChat. So WeChat is a 0.8 million people in China are using WeChat and doing the payment through a mobile. So it's not they are going to the bank. It is not that bank mobile app is being used. It is being used WeChat, which is kind of chatting software, which is very much like a Facebook type of. So lot of facilities are there, and people are going to cashless. I mean, I was watching one of the recent video where they demonstrated as a case study that can somebody live in Shanghai without the money if they have a mobile and WeChat app, and they showed it to whether it is a restaurant, whether they are buying something on a shop, or whether they are, and better offering. So one of the thing is they did it offering before, like if you place the order at least 15 minutes or 20 minutes before to the restaurant, you can get a 3% to 5% discount. So the payment is coming with the better offering. And when the payment is coming with a better offering, definitely customer will move very fast. And a lot of wallets are coming up. So wallets is giving up as a similar thing like prepaid. Bank has tried many years back, in fact, how a prepaid card can work. But now with the wallet, where the offerings are different today, telcos are coming up with their own wallets with the different offerings, and various other wallets are coming as well, and that is changing the space as well. Data. So data is definitely, I can see in the next 5 years, is a huge change because of the artificial intelligence, cognitive computing. Like Alexa can do this, Alexa can tell me that what is the temperature in California, Alexa can you tell me about the weather today, can you tell me about this person. Any musician you can ask, Alexa can sing a song for you in the same musician. I mean, so Alexa is just a very early stage of the whole thing. Cognitive computing will change the lifestyle of the people at home. This will change the lifestyle of the cities as well. So now smart cities are coming up, and smart city will coming up with all this IoT. So every gadget and every light and everything is coming up with the IP address, and that's what is the game changer. And cognitive computing and the data will definitely change the lifestyle of the people. And when the lifestyle will change, you have already seen that how the people move from one offering to another offering. And that is the disruption to the banks as well in this area. And of course, investment, definitely everybody is now. Before that, banks having a lot of people who are telling the people that how to invest, but now with the robo-advisory or the robo-advise, they are building up a machine to analyze the millions and billions of the data and probability and tell to the people where to invest. And it's a probability of the profit. And if people will start using it, and if it will be serving better, this disruption will happen. It will take time. I can understand it will take around 5 years time to that this robo advisory has to be mature. But what I'm trying to show here is that what are the 4 areas where the disruption is, and that is the focus area supposed to be, in fact, for the banking area. So this is something that I started with in a very early starting, that how bank has moved from a very manual to the digital space, how the branch is moving towards the internet banking and now to the mobile banking, what will happen in the next 3 years. So I can show you the same slide again to you, and let's talk a little bit about it. 2021. So 2021, you can see this slide, which is showing you how the mobile will penetrate by 2021. So that is from 2016, it is 3x. And my view is that it will happen, because the way, if I'm calling it that 0.7% of the, 700 million people are using the WeChat in China, and in Singapore this penetration is very high too, which is almost 90% people are using mobile for their transaction and for they're using for a payment as well. So there are areas where high penetration of the mobile. So there is one view that we have seen where the trust on a bank is low, like Europe, where because of the financial crisis, the people trust has gone down. And because it has gone down, there's a lot of mushrooming of these challenger bank, the new payment offering, the new understanding, the branch closure. Today, it is globally 4% of the branches is being closed, and this is the globally. Some banks are closing very heavily, some are not closing, some are making it smartly. So in the next 3 years, definitely mobile penetration will be 3x, and wherever is the branch bank confidence to the people is low, you will see that penetration of these challenger banks or these fintech companies or these people who are coming with the various offerings, people will start using it. And wherever the trust is high, it will take longer. So, but one of the thing is very important. The bank who will really doing more in this space, they will be able to give a better offering to the customers. They will be giving a better intelligent services to the customer, and by doing this, they can be able to increase their revenue. So coming back to one of another slide, which is what will happen if banks will not do anything. So this is a DBS slide, and they said that ROE impact is 18% in the next 3 years, and ROE will drop also if banks will not do anything, in fact. So two options. One is the banks who will do enough, definitely their offering will go up, like their ROE will go up. The bank who will not do enough, they will see the real challenge, and that can go up to 18% by 2020. Another area which is not talked here, but actually that is very, very important, that how the bank has to reduce their cost. Bank cannot continue the way they are having their cost, and they have to see between 5 to 10% cost reduction every year. And if they cannot be able to do that, might be in a 3 years term, they will not be very relevant, because the other who has changed themselves very well, their cost has gone down and their offering is better. So that they cannot come to the right pricing because their cost is high. And that's what is the in a digital transformation, I always ask about 3 things. One is, you have to understand that how you can be able to reduce your cost too. And this can be done with the back office automation. There is a huge opportunity in every bank that back office can be changed too. And the robo process automation is nothing but the same way what car industry did it. They put the robots to manufacture the car. So what they did, basically they analyzed that every step the human being is doing it, and they have given this step to the customer, to the machine, and said do it. And same thing can be done in banking as well on a back office, that whatever people are doing it, they can be able to, that can be given to the machine. And that's called the robo process automation. And a lot of tools are available like OpenSpan and other, which they are doing it. So that is the one area. And second is a cognitive computing on a back office, because the interaction, it is not necessary that every call has to go to the human being. These challenger banks are not having a call center, by the way. Some are having it, but it is very, very minimal. So where the call is going actually, and how the answer is coming, it's a bot. It's a cognitive computing, it is artificial intelligence. So if a customer is asking that what is my account balance of A, there is no need that somebody has to take that call. It has to be automated in a way that machine has to respond it. And machine has to respond like a human being. It should not be like a very machine kind of way. It should look like a very human-based responses. And because of the artificial intelligence and the behavior analysis of each customer, the machine can understand that what kind of question the machine can, this person can ask actually at any given point of time. So the lot has to happen on a cost save, how the efficiency has to be increased on a back office, how RegTech has to be improved, because the bank is putting up a lot of money in a regulatory reporting, and it is very important that has to be automated. That is very important, the accuracy has to be increased. So third thing which I always say, and banks has to understand it, that it is not the disruption from outside, it is a disruption within ourselves. So we trained our people in the last 10 years on the basis of controls, on the basis of complying the regulation, on the basis of right process, on the basis of audit. So whole mindset of these people is risk-based. I'm not telling here that we have to totally change it. But what I'm saying here is that this has to be changed a little bit in a way that mindset change. The people have to think customer first rather than looking into these 4 areas. I remember myself, and I am one of the banker who always speaks about that whenever I am talking to my own people, I say, risk first. We are the banker. We are the custodian of the people's money. We are the people who has to make sure that we should have all the controls. So your first priority is to make sure your process and controls are right.
you make sure that we should not end up any breach of the regulation. That's what me. And now I'm standing here telling you people that no, this doesn't work that way. We have to come to the level where we have to train our people again. We have to train and educate the people again to the level where we have to think customer first. And then we should think about these controls. So, I'm concluding on this space that training is the key in the banking. In the next 3 years, the banks has to think about it that they should they are spending a lot of money into the digital offering. However, they should not forget about the mindset change within the organization. The people has to be changed. The people thinking has to be changed. The people has to start, the people who are making the products. Now the agile working is there. It is not anymore that the people are developing the product their own. And it has to be very agile in every bank. The people on a technology side, the people on a product side, the people on a control side, and the people from the customer. And maybe the customer should be sitting in those meetings. And we should be talking to customer and saying that how we have to do it. And very interesting that every banker feel that he knows his customer. I have seen it. So we always say that we know our customer. And really, it is true, yeah, to a certain extent. But things are changing very fast. And we have to think from a outside in, not inside out. We have to not think about product and product wrapping. Instead of that, we have to think about intelligent service, not product, service. Intelligent service to me is on a services like Uber, Airbnb, and by the introduction of the blockchain, probably this discussion will go differently. I will cover separately. Probably these intelligent offering will not come with the centralized services. So maybe Uber is a company today, and tomorrow the Uber will come on a blockchain where the no company will be there, and the customer will be able to do and interact with themselves without any kind of company. So the intelligent service is all about not the way we offer the service. It is a service which is the customer would like to use it. And so I conclude my point of view that whenever the people are doing the digital transformation, they have to keep these things in mind. It's not the banks are not aware of these disruptions. Banks are very much. It is not that every bank is doing what they're supposed to do. So a lot of banks are doing much better than some of the banks. And with this slide, I will end up the banks who will not do much of it, they will be impacted on a ROE in the next 3 years. Thank you very much.